morning and good afternoon, and thank you all for joining us for today's webinar on cybersecurity insurance. I'm Mark Cantelli, Vice President and Head of Global Delivery for TollPlus and the moderator of today's webinar. If this is your first IBTTA webinar, allow me to introduce you to this organization. We represent the owners and operators of the toll facility and the businesses that serve them. One of IBTTA's priority is to provide a platform for sharing knowledge and expertise on the range of relevant topics affecting the operation and governance of the worldwide tolling industry. Today's webinar was developed by the Council of Platinum Sponsors Subcommittee on Cybersecurity. It's the sixth session on this important topic that we've held for IBTTA membership and tolling community. The first cybersecurity insurance policy date back to the late 1990s and early 2000s during the dot-com bubble. As businesses took parts of their operations online, fraudsters did it as well, accessing systems without authorization and using computer viruses to disrupt operations and extort companies for a profit. These early cybersecurity insurance policies reflected and still nascent nature of online business, covering things like data processing errors, unauthorized system access, data loss, and computer viruses, things that today might seem quaint by comparison. As online operation got more sophisticated, so did cyber threat actors, and consequently, so did cyber insurance. In today's world, cyber attacks can not only be harder to detect, more damaging, but it seems that everyone can be a target. Carrying cybersecurity insurance makes as much sense as carrying health insurance or car insurance, but acquiring and maintaining a policy can sometimes feel like a full-time job. That's what we're here today to help simplify for you. And I know our panel is up to the task, so let's meet them now. Our presenters today are Greg Ardergaard, Vice President Legal Counsel at TollPlus, Teresa Leahy Pramati, Senior Broker at and Team Lead at Willis Towers Watson, Elizabeth Caldwell, Claims Advocate and Cyber Claims Leader, also with Willis Towers Watson, and finally Jonathan Davies, Associate Director of Cyber Risk Consulting with Finance. Each of them are cybersecurity insurance experts, and together they can provide a 360-degree view of the topic. You can find their full bios on the event page on the IBTTA website. Before we begin, let's go over some quick logistics. The webinar will last about 60 minutes. We encourage you to ask questions via the chat button at the bottom of your screen. Please make sure you address all questions to all panelists and attendees using the pull down on the chat. Presenters will try to answer the questions throughout the event, and we'll be addressing the questions at the end of all of the presentations. Let's get started. It's my great pleasure to begin the program with our first presenter, Greg Ardergaard with TollPlus. Greg, please take yourself off of mute, and the floor is yours.
Thank you, Mark. As Mark said, my name is Greg Ardergaard. I'm the General Counsel of TollPlus and TollPlus's affiliate companies. And when Mark approached me about talking about the adventure that we had trying to put together our cyber insurance policy, I said, for sure, that seems like a great topic for IBTTA. The primary objective that I had was to raise issues that I found particularly interesting that I had gone back to talk to our broker, Teresa Carmody, about. And I think, speaking with her, that we've summarized this into a few key questions that she's going to attempt to answer. But if we go to the next slide, I will introduce them. And then the next one again. I think we're a little behind on the slides. Sorry. Keep going. And another one. There's my questions. Okay. So the first question that I'm hoping to answer is the question that's probably on everybody's mind, because it's what you've heard about, and that is that the cost of cyber insurance has increased tremendously. At TollPlus, we hadn't actually gone out on the market for over a year because we had some renewals for various reasons. It was shocking. And I'm sure that everyone on this has heard that, and that's why you're tuning in today. So I've asked for We know there's been a lot of cyber activity, ransomware, et cetera, but maybe even a deeper dive that Teresa can give us about why exactly has it increased so much? Why are we talking about doubling and tripling your premiums? Particularly surprising to me, and I'll knock on all the wood around me before I say this, is, without having had any major claim activity, we still saw a big increase. Usually I would expect to see increases if we'd seen activity, but even when you haven't, you're going to see increases. So I've asked her to speak to that issue as well. Next, in the past, most cyber insurance was put together in $10 million layers. If you've done this in the past, you probably were building on that. Simple math, if you need a $50 million stack, you need 5 layers. And that's doubled now because the insurance carriers have cut that in half to 5 million, which complicates everything massively because now you're talking to twice as many insurers. You have to answer twice as many questions. So I've asked for some inside information on why are we doing that? Do we think that's going to stay that way? But when you go back out on the market, if you haven't dealt with $5 million layers before, that's the new normal. That's what we're facing now. On top of that, when you're building your stack, and now you've got twice as many layers of your stack, I think increasingly, I know we had a problem here, and I've talked to more and more people who have had this problem, that there will be a layer of your stack that you just can't fill. So you have your first 5 million, you have your 5 million in excess of 5, but suddenly you can't get 5 million in excess of 10. Nobody wants to cover it. And we had a position that I'd never encountered before, and it was just shocking to me where, Teresa says, my team's built your stack except for this one layer. We can't get this one layer. And suddenly we're going everywhere trying to find an insurer to fill this one layer. And I saw a question pop up about what layers are, and I'll answer that right now just to preview for Teresa. But you're going to, if you need to get 20 million, you're going to need to have one insurer who's going to do the first 5 million, one insurer who's going to do the next 5 million, the next 5 million, and the next 5 million. So if you're building a $20 million stack, you're going to have 4 $5 million layers. If you're building a $100 million stack, you're going to have 20 $5 million layers. And the problem now is that we're finding, and I think a lot of people are finding, you can't fill the 10 to $15 million layer. So why is that? How do we work around that? What happens if you can't fill that layer? What happens if you can't find an insurer to take that? The next question is the hopeful question, and hopefully Teresa can give us great news about when cyber insurance costs will come back down, because they seem just shockingly high right now. And is all of the new cybersecurity measures that everyone on this webcast is working on to try to do better and better with security, will we see costs come back down once we learn how to deal with the new threats? And finally, I think really importantly, is what can we as the businesses do to help our brokers and the insurers make it more palatable to insure us and help us to get the insurance? Because one thing for sure, and I know Mark felt the pain on as well, is if you haven't gone out yet this year, in the past, you would give a little bit of information, your broker would come back with information, and you would get your insurance. And now we had probably every single insurer that was looking at us come back with questions. Sometimes the same questions over and over and over again. And everybody wants to know what you're doing. And so what can we do, Teresa and team, to help on the front end of making sure that we have as many answers in front of you and in front of the insurers in advance so that they don't keep coming back? And so that's what I think the new norm is. And I'm looking forward to Willis and the team explaining to us how that works. So I'll pass it over to Teresa.
Thanks, Greg. If you wouldn't mind
Thanks, Greg.
advancing on to the next slide. Thanks. And one more, please. Thanks so much. I did see another
Teresa.
question. Mhm.
Oh, just wanted to make sure you saw the question that came in. Okay, great.
I did, yes. Just wanted to make sure that I addressed the question that came through the chat a little bit earlier about what a layer is. So what Greg was explaining earlier, in particular for their program, when we talk about layers, we're talking about the aggregate limit of an insurance policy. And to Greg's point earlier, because the cyber market has become very difficult to navigate through and appetite of our insurance carriers have changed, Typical layer amount, so a typical policy would go for 10 million aggregate and limit. Because the changing market is what it is, the appetite has become less. And so what Greg was referring to is a $5 million stack. It's a $5 million aggregate policy. We're working with smaller layers and more carriers because appetite has changed. But I think that kind of segues nicely into talking about what's going on in the current state of the cyber insurance marketplace. I really like this slide because I think it shows very accurately the pain points that a lot of organizations went through in 2021 and now are experiencing in 2022. You can see in the various quarters of 2021, the rate changes that we experienced as brokers and carriers alike. Beginning of the year were fairly low to mid-size increases between 15 to 30%, and then started ticking more upwards toward that 50% mark. We really saw the most significant hardening occur between Q3 of 2021, and we still are seeing it today in Q1 and Q2 of 2022. And I'll also add the caveat of, these increases were really typical of organizations that had very, very good controls in place. They're also accurate for organizations that did not have a lot of claim activity. Those increases would certainly look different if there was claim activity with an insured with an account. And generally speaking, why are we seeing these increases? Really, the main reason is that we've seen significant increase in ransomware claims occur really for the past 2 years, but very significantly in 2021. That has really driven the price of cyber insurance as well as the retentions and coverages being offered. Something that we've experienced and seen as a result of this ransomware claim activity are carriers kind of making changes to some of the coverages that are being offered. They're really looking to dig deeply into an organization's controls to see, what are they doing proactively to make sure that they're protecting themselves against ransomware claim activity. As a result, if organizations don't have key controls in place, some expectations that we have seen are, carriers reducing certain coverages, some being ransomware sublimits. So we've seen some ransomware sublimits be implemented. We've seen co-insurance being implemented. So what that means is that, if an insurance carrier has implemented co-insurance, let's call it 50%, and we'll say, tolling company ABC experiences a ransomware event, and there's a 50% co-insurance applied there. ABC tolling company can be expected to pay 50 cents of every $1 of claim activity, as well as that 50% otherwise coming from the carrier. But again, high level, significant hardening of the market due to continued ransomware claim activity. We've seen carriers make changes in terms of coverage. We've seen an increase in premium, increase in retention. We've seen changes to coverage, sublimits, co-insurance. And also I'd like to add that the underwriting process has become much more strenuous and arduous for our insureds. There are a lot more questions being asked in terms of details surrounding certain controls in place for an organization to be as best positioned as possible for a ransomware event. If you wouldn't mind advancing on to the next slide. Thanks. Okay, so this is a bit more of a market overview of different factors affecting rate from 2015 to present day. We historically saw a very competitive cyber insurance market. Generally speaking, we were able to go to markets with the name of an organization, a website, number of records and revenues, and most of the time be able to get a quote. That is, 2014, 2015. Obviously, that has changed with the claim activity that you see here. In 2017, we experienced NotPetya and WannaCry ransomware events. We saw some significant losses in terms of business interruption, right? That was something I don't think was fully contemplated when we were thinking about, how we were looking at ransomware coverage. In 2018 and 2019, we saw more changes in the regulatory space with GDPR and CCPA. Those are laws looking to protect EU citizens and Californian citizens, their sensitive information. So we've seen, we saw an uptick in regulatory type claims. And now we currently remain in the ransomware crisis that, I think a lot of us here hopefully haven't experienced, but have seen in the news as of late. And then last but not least, event-driven cyber exposure. So over the past year in particular, we've seen more systemic type events occurring. So that is your SolarWinds, Excellion, Microsoft Exchange, Log4j. Those are just a few types of examples where thousands of organizations are using very similar technology. And if there's a vulnerability discovered in that technology, it has the ability to affect, like I mentioned, thousands of organizations. So our insurance carrier partners are really looking and thinking about these systemic type risks very carefully. I just want to make sure that I'm checking the chat quickly. One question from Rob Todd: are insurance companies requiring risk analysis or proof of adequate cyber controls? If so, what documentation is required? A very good question. That's something that I kind of alluded to previously. They're really digging deeply into understanding the controls an organization has in place. What we've Normally, how we've achieved that is by having organizations complete new business applications and ransomware supplementals. These ransomware supplementals are really looking at how an organization is backing up information, how they're segmenting sensitive information from each other, and really asking detailed questions. So, you could work with your broker in that sense and making sure that you're telling that story as best as possible. And then I see there's one other question I want to make sure I touch on. Is there a more or less universally accepted set of requirements regarding cyber controls regarded by carriers? Something, okay. So actually we touch on that in just a few slides. So if you'll hang on, we'll go there in just a moment. We do have some key underwriting controls that our carriers are looking to be in place. If you wouldn't mind advancing on to the next slide, please. Okay, this is really another more of an at a glance about the ransomware crisis that we've experienced. I think what is most telling on this slide is the amount of ransomware claim payments that have been made since 2015 and how that number has increased exponentially, right? We started with $325 million in payouts for ransomware claims in 2015. And as of 2021, we are north of 20 billion. I am very interested to see what claims trends will look like in 2022 with ransomware claim payments, but really, I think a helpful slide to show how prolific these claims have become. If we could advance on to the next slide, please. Okay, hopefully this will answer some of your questions that were mentioned earlier about, what do we need to be focused on? These are our key areas of underwriting focus. Top of the mind, most important being multi-factor authentication. Our underwriters are really looking for this to be implemented enterprise-wide. Open RDP ports, those issues and controls are also coming up a lot on calls with underwriters and additional questions. They want to make sure that organizations have a good understanding of their access and that they're patching on a regular basis. As I mentioned before, backups, what do your backups look like? Are they segmented from the main network? Is there MFA in place? Are they encrypted? Those are, again, some more basic questions that you'll get from your underwriter partners. But reason being, again, with ransomware claims, it really is up to an organization and their decision whether or not they want to pay a ransom when those types of events occur. What will position an organization very well is if they are very confident in their backup. So that's why there's a lot of additional questions being asked there. And then in addition, privileged accounts, our carriers are looking to understand how many privileged accounts there are. Continued employee training and phishing awareness. Certainly as we continue to work in a mostly remote environment, we've seen an uptick in those types of claim activity there because we're decentralized and more likely to click on links. As I mentioned, patching cadence is also very important. And then last but not least, endpoint security tools. our carriers are generally looking to understand what tools are being used by an organization. This is really more for to kind of take home, right? And share with your IT folks a little bit more color than on the previous slide, but our key areas of concern are remote desktop protocol, MFA being implemented enterprise-wide, a whole list of additional safeguards, and then very good backup policies. And one other item I'll add is that, are we practicing, these business continuity plans and incident response plans? Repetition is always key and very important in those areas. Again, more of a helpful slide here for, reducing cybercrime, as I mentioned earlier, because we're still mostly decentralized work environment. Folks are more likely to click on those malicious links. So these are some best practices, especially if there's any sending of money, wire transfers going on at an organization, just some helpful tips and tricks to have in place. And then generally speaking, when we think about and talk about cyber insurance, these are the main insuring agreements that we would include. We've got your breach response costs. So, cost to notify affected individuals who've been affected in a breach, your network security and privacy coverage, that's coverage for indemnity and defense costs for your third-party claims alleging a security failure or privacy event, regulatory fines and penalties to deal with any state regulators. And then additionally, media liability. This is super helpful. If there's any online presence, certainly, looking to cover any, media wrongful acts, defamation, copyright, trademark, et cetera. Business interruption, certainly as it relates to ransomware activity, ransomware event occurs and you're unable to perform basic aspects of your business. And at the end of the day, you're losing business income. So we've got certain aspects of business interruption and system failure included there as well. Data recovery, which is looking to get an organization back to the point at which they were at before an event occurred. Certainly cyber extortion and ransomware, that's a coverage that's been included, albeit, with this changing environment, we have seen changes in how that coverage is being offered. And then some other additional coverages, cybercrime, reputational harm, and computer hardware replacement costs. Those are additional typical coverages that are included on a cyber policy. Okay, and with that, I will hand it over to talk about claim trends with Liz Caldwell.
Great. Thanks so much, Teresa. Hello, everyone. If we could move to the next slide, please, that would be great. Thank you so much. All right. So this slide shows some headline figures. Within WTW, we have a data analytics team that keeps track of claims trends among WTW clients. So this pertains to clients across all different types of industries between 2014 and 2021. And as you can see, since 2014, the number of cyber claims reported each year has really gone up substantially. However, one interesting thing you'll note is that there was a slight dip in the number of cyber claims reported in 2021, even though it's still significantly a higher number of claims that were reported overall since 2014, 2015. So we think the slight decrease in cyber incidents reported in 2021 is actually due to a slight lull in ransomware attacks that were reported during the second half of 2021. In early 2021, we saw a lot of really large, high-profile ransomware attacks, such as the Colonial Pipeline ransomware attack. But during the second half of 2021, we think the lull in ransomware attacks may have been due to increased public awareness, government efforts, and companies becoming more stringent with their network security controls. We also think the decrease in large ransomware incidents could be attributed to some of these threat actors going dark for a while to regroup and potentially reemerge as new entities. So ultimately, this lull we saw in the second half of 2021, we certainly don't think is permanent. We're already seeing an uptick in ransomware incidents being reported in 2022. I mean, at the end of the day, these types of attacks are low investment, low risk, and high reward for the cyber criminals. So this is something we only anticipate going up over time. You'll also see on this slide average claim settlement amounts. And again, this is across all industries. And these particular figures pertain to claims reported between 2014 and 2021. So you'll see that the largest loss between this time period was 291.9 million, whereas the average cyber claim settlement is 2.5 million. But this varies based on industry. I was able to pull up some data for IT clients, and the average cyber loss for an IT client is actually slightly lower at 1.4 million, whereas the largest loss an IT client suffered was for 15.5 million, again, significantly less than the largest loss across all industries. As for transportation clients, the largest loss a transportation client experienced was for $51 million, whereas the average cyber loss for transportation clients tends to be 3 million, so a bit higher severity than the average across all industries. But that's some basic data that we have on average loss amounts. Next slide, please. Okay, so this next slide has a pie chart showing the most frequently reported types of cyber incidents. And you'll see that again, this is specific to 2021 across all industries of WTW clients. And you'll see that the most frequently reported type of cyber incident is a malicious data breach. So malicious data breaches include losses where there's unauthorized access of data by a bad actor. This can also include physical theft of data. So I see a question here. Are claim notifications lower because fewer organizations are willing to admit a claim? I don't think that's true, particularly where there's large loss involved. And, if a client anticipates that, total loss would exceed the retention amount and the policy could come into play, I think clients are certainly wanting to report those claims so that they do have insurance coverage in play. Now, for incidents where a company may not be sure whether they're going to ultimately incur loss, and it's more of kind of a notice of circumstance, it's possible that companies may hold off on reporting the cyber incident until they have more information. But I say to the extent that companies anticipate they're going to incur a loss, they would go ahead and report that to their cyber insurance carrier.
Also, Liz, in the event of a data privacy breach, they might have a compliance obligation to report that as well.
Absolutely, yes. So I would say, yeah, typically these incidents are reported. I don't think that would account for the lull in incidents reported overall at the end of 2021. So in terms of types of notifications, again, based on event, malicious data breach really is still the most frequently reported type of incident. Though ransomware is catching up, that's something that more and more clients are reporting. Again, this really is low risk and high reward method of cybercrime. And part of the reason I think we've been seeing an increase in ransomware incidents reported is that this is something that can affect any type of industry, whereas malicious data breaches, might be more aimed towards organizations that hold large amounts of protected health information or personally identifiable information. A ransomware attack can impact any type of company, regardless of the information that they hold, since ransomware claims can be used to either block access to systems or to encrypt or ultimately exfiltrate data. So blocking access is something that impacts organizations of all types, regardless of industry. So this is something, we only anticipate going up over time. And then the third most common type of incident that's been reported is an accidental data breach, which is the result of accidental disclosure, destruction, or loss of data. And a typical example of this type of claim we see is where someone emails documents containing protected information to an unintended recipient. And overall, if you combine malicious and non-malicious data breaches, that accounts for almost 50% of all cyber claims that our clients are reporting. The one other type I wanted to mention is social engineering, which is at 11% of cyber notifications that we've seen in 2021. The most common type of social engineering incident that's reported is impersonation of an employee. But whenever you have impersonation of a CEO or senior manager, that tends to be the costliest type of a social engineering incident. I also took a look at statistics specifically pertaining to IT clients and transportation clients in terms of what types of cyber incidents they're experiencing and reporting. And overall, it followed suit to this pie chart. It's the same types of trends affecting IT and transportation clients as industry-wide. They're still reporting mostly malicious data breaches followed by ransomware incidents. So this is kind of something we're seeing across all industries. Next slide, please. Okay, so this slide shows basically a breakdown of cyber incidents reported based on industry. So you'll see that clients involved in the healthcare and manufacturing industries reported the most cyber incidents in 2021 at 17% each. This is interesting because previously the healthcare industry reported the most number of cyber incidents, probably based on all of the protected health information and data they hold. They would experience more data breaches. I believe even in 2020, it was almost like 30% of all cyber claims that were reported were by clients in the healthcare industry. But this is really changing. I think part of that, again, is that ransomware incidents impact all types of organizations, which is leading to increases in reporting across industries. And from personal experience in 2022 so far, some of the most significant claims that I've seen come in have been in the manufacturing industry rather than healthcare or something else. So it's something interesting to be aware of. In 2021, 7% of cyber claims reported were by clients in the IT industry, and 3% of cyber claims reported were by clients in the transportation industry. But still, even though these particular industries may be reporting a few smaller percentage of total cyber claims, that doesn't indicate that it's going to be any lower in severity, particularly since, as mentioned earlier, I believe transportation clients still had a higher average cyber loss than overall clients. All right, if we could move to the next slide, please. I think I see a question. Oh, no, that's the same question as earlier. Okay. So this chart here specifically pertains to data breaches, and this shows average costs that clients incur as a result of a data breach and what the most significant costs are. So interestingly, when you think about a data breach, you may be thinking that the most significant cost you're going to incur is forensic investigation to determine, the cause and scope of the incident, or notification costs to notify individuals whose protected information was compromised. But actually, the most expensive part of a data breach claim is regulatory fines and penalties. To the extent the regulatory body gets involved and does ultimately decide to assess fines and penalties against an organization, that tends to be the costliest aspect of a claim, even higher than legal fees. So just something interesting to be aware of in the event of a data breach. It really is those regulatory bodies that assess fines, that may assess fines, and that could be the costliest part of a cyber claim. Next slide, please. So we have some data here pertaining specifically to ransomware attacks. This slide shows the average ransom demand versus the average ransom payment amount made by WTW clients. So of course, you'll see both the demand and payment amounts have gone up through the years since 2016. In 2021, the average ransom demand was just under $6 million. However, the actual amount that clients end up paying as a result of the ransomware attack is much, much smaller than what's demanded. You'll see in 2021, the average ransom payment amount was under $1.6 million, quite a bit less than $6 million. And you'll even see that since 2020, the actual amount paid for a ransom has dipped down slightly. So why is this? We would think that a big reason is that clients are taking advantage of using ransomware negotiators to assist them in negotiating down the ransom amount. A ransomware negotiator is someone who is typically covered by your cyber insurance policy, and they have experience actually negotiating with the threat actors, and they're familiar with all the different types of ransomware variants. So based on their experience negotiating and overall familiarity with ransomware strains, they're able to really negotiate down to the lowest price possible in order to, resolve the matter. And also, it's not always necessary, or a lot of clients choose not to engage with the threat actor, choose not to pay the ransom. So it's really, a company by company decision. No one is obligated to make that payment. But to the extent that companies do make that payment, it ends up being that the actual amount paid is lower than the actual demand by the threat actors. If you move to the next slide, please. So this slide pertains specifically to ransomware attacks again, and it shows a breakdown of average cost making up ransomware notifications. So interestingly, even higher than the actual payment of the ransom amount is a business interruption loss as a result of the ransomware attack. So when systems are down, companies aren't able to run operations as normal. And as a result, they may incur business income loss and extra expenses that they wouldn't have incurred but for the ransomware attack. And these business interruption costs can be very significant. Lost business income over months, it really can add up and end up being the costliest component of a claim. Another frustrating thing about the business interruption component of the claim is just it's a very hard process to prove your business income loss. A lot of times companies need to engage forensic accountants to assist them in completing their business income submission to send to the insurance company, which is of course a lengthy process. And then in turn, once your business income loss submission is submitted to the insurance company may in turn engage their own forensic accountant to go back over the submission and, fight over certain elements and determine, what or what not is covered. So that certainly is something that is much less clear cut than just reimbursement of the ransom payment itself. Typically how that works in terms of getting reimbursed for your ransom payment is if a company chooses to pay the ransom, of course, the ransomware negotiator assists with that process and conducts an OFAC check to make sure that the entity isn't sanctioned by OFAC. And then in turn, once the insurance company decides to reimburse the ransom payment amount, they conduct their own OFAC check again to make sure that the entity isn't sanctioned. And then, that's it. They reimburse payment once you provide specific documentation. But the whole business interruption process is just much lengthier and more complicated.
Could I ask a question, Elizabeth?
Sure.
I noticed on the prior slide where you have for data breach, the number one thing was regulatory government penalties.
Yes.
But I don't see that here. Is there a reason why the government's not applying the same kind of penalties to a ransomware attack as a data breach attack?
To the extent that there may be a resulting data breach in conjunction with the ransomware attack, there could certainly be regulatory fines and penalties as well, because ransomware attacks really can be the perfect storm of a claim. They can involve exfiltration of data, which ultimately is a data breach and does require, notifying regulatory bodies. So I think this particular example would be for a ransomware attack that may not necessarily also involve exfiltration of data, but to the extent there is exfiltration of data, there could certainly be regulatory fines and penalties as well, and that could make up a significant part of the claim.
And would an insurer view that almost as two separate claims? That there's a ransomware claim and a data breach claim as two separate components, or?
In terms of insurance, yes, there would be separate insuring agreements triggered by an incident that involved both exfiltration of data and ransomware. Typically in the policy, you have a specific cyber extortion insuring agreement that covers actual payment of the ransom and the ransomware negotiator. You also have an insuring agreement for business interruption, which would contemplate the business income loss, extra expenses, and forensic accounting services. And then there's a separate insuring agreement pertaining to data breaches or first-party cyber loss, which would include those types of costs. So it really is broken down kind of by different types of coverages, if that makes sense.
It does. Thank you.
Sure, not a problem. All right, next slide, please. And this last slide in terms of claims trends, these are things that my team has been seeing over the past few months. And really the big one is ransomware and resulting business interruption claims. These tend to be very, time consuming and expensive. So that's something we spend a lot of time assisting clients with. Another thing we've been seeing quite a bit of over the past few months is dependent business interruption claims. So this is a type of incident where your third-party service provider suffers a cyber incident, such as a ransomware attack, and then they suffer an interruption in service. And then as a result, a company who's downstream relying on that service provider for services is then unable to receive those services and has to find workarounds or engage alternate vendors to provide those services. And as a result, they end up potentially incurring business income loss or extra expenses they wouldn't have incurred but for this third-party vendor's cyber incident. Some examples we've seen in the past few months are the Kronos incident that I'm sure many of you have heard of, as well as Expeditors. And one other big trend that I kind of mentioned earlier is increased scrutiny by carriers of proofs of loss or submissions for business income loss. Since it is a hard market, these insurance companies really are drilling down, trying to, parse through your business income loss submission, which certainly makes it more challenging to move the claim forward in a timely manner. So that's just something we've been seeing across all industries, across all different types of carriers. And I anticipate that we're going to continue to see that going forward. Does anyone have any additional claims related questions? No? All right. And with that, we could move on to the next slide. And I will turn it over to my colleague, John.
Thank you, Liz. Slide, please. So, hi, everybody. This slide is intentionally busy to give you a feel for what your average CISO has on their plate to deal with. A variety of different, sometimes competing goals. And I like to leave this slide up while I run through some of my musings around cyber insurance and incident response and ransomware, so that maybe this will spur some questions, and you can be busy typing away in the chat box. So the first thing I want to circle back to was something that Teresa talked about regarding ransomware supplemental applications. So when you apply for your cyber insurance, most of the larger carriers, they have a ransomware supplemental application you'll be asked to complete. And a problem with some of these applications is that they're very binary in their response options for your questions. For instance, you might be asked, do you have MFA across your entire enterprise network? And the answer to that may well be, and it says yes, no. So if you just tick no, then they will likely not read any further. However, there might be a very good reason why the answer is no, because you've conducted a risk assessment. You have MFA where you consider it's important in front of your critical network components, and it would be cost prohibitive and unnecessary to put it anywhere else. So, these types of compensating controls, we recommend that don't be afraid to add a continuation sheet to these ransomware supplemental applications, 2 to 3 bullet points, and state your case, because you really don't get much of a floor to explain what the ground truth is like in your network, and your network better than the underwriters. So that's just a point on ransomware supplemental. I see a question. What do you recommend for key service providers? Oh, hang on. Key service providers, should organizations invest in redundant key service providers that may cost several millions to set up? Are we talking, is that a question about vendor lock-in? I'm not really sure I understand that question, Jay, Charla.
I think it's related to third-party service providers. A lot of the toll agencies have tons of third-party service providers, and the point that Elizabeth was making, it may not be your direct system, like a back office system, but it could be one of your service providers, like payment processing.
Yeah, I'm with you. So
Yeah.
let's talk about vendor management. Where we see these systemic supply chain attacks, like SolarWinds, like Microsoft Exchange, these are third parties. How do we defend ourselves against third party attacks? Well, we need a robust vendor management or vendor selection process And in the ideal world, we want to vet these organizations before we agree to do business with them. We want to consider them as an extension of our own network, and ensure that they meet what we would consider to be a minimum security standard that is on par with how we how we judge our own network. It's critically important to make sure that any service level agreements or contracts clearly state where your responsibility ends and theirs begins, and vice versa. But above all else, it's critical to remember that you outsource the service, you don't outsource the risk. So the risk remains with you, which it makes it more incumbent on you to make sure you do the necessary due diligence before you start doing business with a vendor like that. There's another question in the chat. Issues with insurance companies denying claims for what they perceive as failed security controls. I will let Teresa answer that one.
That's certainly a very good question. I think that the underwriting process as it stands now has really afforded our underwriting partners a lot of additional information. So, based on the way an organization completes their application in the ransomware supplemental, and or perhaps they have an underwriting call, right, where they have all underwriters together and they're discussing at length what their controls look like. I think the carriers take that information as what is true for that organization at that time. And when a claim is coming through, they will look back on the submission material to see, did the organization state that they had MFA in place enterprise-wide, after the forensics analysis is completed, when we find out, perhaps it was an MFA issue that led to a ransomware event occurring. There's certainly a possibility that there would be a disagreement, but that's why we, have our insureds work with, our broker partners, our very experienced claims and legal groups. Your broker claims teams are there to advocate on your behalf. And also those claims and legal groups are working, together with the claims teams at the insurance carrier. So it can be a little bit of a process, but as long as there's open communication, I think generally speaking, there have been good results and, fair assessments by both.
Thanks, T.
Broker teams. Yeah, thank you. Sorry.
Appreciate it. So on payment processors, obviously a very important third-party vendor in your industry. What we're talking about with this question, if your payment processor is impacted with a cyber incident, should you have a redundant connection for that kind of service? That becomes an issue of business continuity management. If you've conducted a business impact analysis and recognized how critical your payment processor, uptime with your payment processor is critical to your business, being able to do your daily business, then it certainly might be an idea to have one or more redundant payment processors. Alternatively, in sourcing a payment processor, you might have, when you're deciding which one you want to do business with, you may choose high availability as your most critical need from that service provider. That said, that's not foolproof, and where it is practicable, it is a wise move to have a redundant vendor in most cases. Another question from sorry, I think that's an answer from Mark. Great.
I do have one question.
Yes, sir.
I assume it is standard practice follow up with vendors annually to ensure that business processes and security meets compliance like PCI DSS.
Sorry,
So,
Mark,
yeah, I mean,
you were
it's
very quiet.
kinda-
Could you repeat that?
Yeah, I assume it is standard practice to follow up with vendors annually to ensure that their business processes and security meets compliance. Similar to what
Absolutely.
we have at
Yep.
PCI. Yep.
Absolutely. When it comes to vendor management, I'm a big fan of short-term contracts, unless it's for a significant investment like an EDR solution, in which case you might look at a 3 to 5 year contract. 12-month contract, perfect. Every year it goes back to tender, and you don't have vendor lock-in if they're not meeting the standards that you expect from them. Now, when you're going through the vendor selection process, I'm a big fan of, letting potential vendors know exactly what metrics and KPIs you will be measuring them against, because that gives an air of transparency. And if nothing else, if they know what they're being measured against, they will be more inclined to live up to those expectations. But yeah, vendor lock-in can be a nightmare, and definitely recommend short-term contracts. Is it typical to require service providers to include cybersecurity coverage along with the systems they provide to cover the service recipient's loss or costs in case of an incident involving that system? I'll pass that one to my colleagues, because I'm not, depending on where the breach takes place. I mean, if the service provider is impacted by the breach themselves, I imagine they'll have cyber insurance that will cover their losses, but I don't think that will cover your losses. And please, insurance colleagues, jump in if I'm giving misinformation here. But I would think, you'll be required to have your own cyber insurance to cover your own losses. They would not be liable for your losses.
Yeah, I would agree with that. Jonathan. I think it's important to think about contract language here, and having subrogation included in those contracts. But to Jonathan's point, yes, that's correct. We would expect, and oftentimes in these situations, both the vendor and the organization both have their own standalone cyber insurance. And with contracts in place, that's how appropriate, coverage is appropriately, sent to,
Right. Thanks, T.
Yeah.
So I'm just going to touch on some considerations for ransomware response. Please do keep the questions coming in, and we'll try to sweep up as many as we can. We're almost towards the end. So communications during a ransomware incident, it's really important that you have a policy that lets your employees know what the company's expectations of them are with regards to confidentiality during a ransomware incident, or any kind of security incident for that matter. We have seen cases where an organization has been hit with ransomware, and a member of staff has snapped a picture with their cell phone of the ransom note on their computer screen and uploaded to Instagram, #ransomware. We're all getting an early finish today. Woohoo! And we joke. I always include that as an inject in tabletop exercises, because it's a real world. It does happen. So it's critically important that there is somebody who is appropriately authorized to manage communications, especially external communications with the press and the like, somebody in public relations or legal, that they know that they are the person responsible or the team responsible, and that everybody else knows that they are not the person responsible, and what the consequences may be for breaching that kind of confidentiality. Further with ransomware, there was a time around sort of 2018 going into 2019 where, due to the success of the ransomware threat actors, they invested a lot of their ill-gotten gains back into their business model, and the ransomware industry has seen increased corporatization. They structure their criminal gangs like companies. They have a help desk, they have an HR department, a recruiting department. If you call up their help desk to find out how you go about paying them, they will be very friendly, very cordial. Because it's in their best interest to. But just remember, they are criminals that are attempting to extort you. Earlier, Liz touched on ransomware where data is exfiltrated from your network. We call this a double extortion method, where they'll steal a copy of your data for themselves before they encrypt your copy. This is used to apply additional pressure for you to pay, and pay quickly. you might see that in the ransom note, it says for every day you don't pay us, the ransom goes up by $100,000 and we will post some of your data to our public website. They're just trying to add additional pressure to get you to pay and to pay quickly. One important consideration there is that once data has been taken from your network, unless it's 100% encrypted, from a data privacy standpoint, it's already considered exposed. So any data breach related regulatory penalties and fines, they're incoming anyway, regardless of any promise from the threat actor to delete their copy. That's not worth anything. The second that data leaves your network, it's considered exposed. So if compliance, is a key driver for your security program, that should certainly not be a driver to making you want to pay the ransom. It's a common misconception that paying the ransom is often the quickest way to restore networks and resume normal operations. This is rarely the case. First of all, there's no guarantee that you're going to get a decryption key after you pay. In most cases, you will, because they want repeat business. They don't want word getting around that they don't provide you with one. However, as Colonial Pipeline found, when they got hit with ransomware, they laid out the ransom almost instantly. $4.7 million. As it turned out, they were provided with a decryption key that was so slow in decrypting their network that it was actually quicker for them to restore from their own backups, which were perfectly fine. So, the lesson there is, conduct routine checks of your backups, have a structured data backup policy, test it. Test the restoration every now and again. Make sure that you've got confidence in your backups. They'll perform how you expect them to perform when called upon. And that's the strongest bargaining position you can really be in when faced with that horrible do we pay or do we not pay decision. On that decision, very emotive subject. Nobody should be telling you whether you should or shouldn't pay outside of your senior leadership, executive management, board of directors, legal team. It's a unique business decision to be made at the senior level for every company. It's very easy for certain security professionals. They might say, oh, we shouldn't pay the ransom because it just encourages them. Well, when it's your family name above the, on the company livery, it becomes a very different proposition. And there's no correct answer for everyone. If the threat actor is being vetted that they are not on the OFAC sanctions list, that might be a very real consideration for you. The ultimate decision rests with the company leadership. And I think I'll wrap it there. If there's any more questions, now's your chance to fire them at us. But thank you very much for your kind attention.
Yes, thanks. Give it a couple more seconds for some more questions to come in. If not, we'll wrap it up. But while we're doing that, waiting for questions to come in, I do want to thank our presenters today, Greg, Teresa, Elizabeth, Jonathan, and thank Kristen for pulling all this together, along with Wanda and Cheryl from IBTTA. Thank you so much for all your help in getting this together. You're going to receive a survey this afternoon. Please fill it out. Help us improve future events by completing this survey. It's not very long. It'll only take you a couple of seconds, a minute at the most. Then we're going to post this presentation to the IBTTA website within the next day or so. So, if you need more information, it will be up there. Also, keep in mind, we have some upcoming events in the next couple of months: the Road Usage Charging Finance Conference and the Maintenance Engineering Roadway Operation Workshop. Information for these events are on the IBTTA website, so please visit that. Also, it is award season at IBTTA, so deadlines are approaching for submitting nominations for Toll Excellence Award and Women in Tolling Council Awards. The submissions are due by May 15th for the Women in Tolling Council Awards and May 16th by Toll Excellence Award. We also have two awards this year presented by the Task Force on Diversity, Equity, and Racial Inclusion. The deadline for these awards are June 3rd. You can find out more information on the IBTTA website. And again, with that, we're at the end of the hour. Thank you so much for joining us, and thank you presenters again. We do appreciate your time. Thanks.